In this video, a very simple step-by-step process to analyze any cryptocurrency. If you're coming to a crypto new or you know of one and you want to do more research, you can use this very simple process to actually learn more, place that crypto within the market, and then try and analyze the future potential of it in terms of its business size, its market size, and everything like that. I'll leave the timestamps below for each section and each step in this process. First part of the process, though, is to look at the market stats and the overview of any cryptocurrency. The platform that I will use initially is CoinGecko. You can also use CoinMarketCap. It's a very similar thing with almost all of the same information. I prefer CoinGecko for just a number of reasons, but you can try out both. The first thing we need to do, though, is obviously go and pick a cryptocurrency that we want to analyze. I'm going to choose BNB coin here, and you can see a dashboard full of trading and market information. This is the first thing I'll look at with any cryptocurrency to get an idea of, like, is this a big crypto? Do other people actually trade this thing, or is it just a joke? So that's the first thing. Who supports it? Is it supported on a centralized exchange or a decentralized exchange? You can come down here right to the bottom and look at BNB markets. So these are the exchanges that support BNB coin, and you can see Binance right here. You can actually look at the 24-hour volume to see who the biggest exchanges are, and then you can see all trading pairs. So really what you want to do is just find, does this trade on big exchanges? If you see Binance and MEXC, FTX, this is obviously a big coin and it's BNB coin, which is big. But if it doesn't, if it only trades on a DEX and it's a very small coin supported by very few exchanges, then that may mean it's just a small coin, or it may set off some alarms to say, hey, this isn't really what I want to be getting into. The second thing is trading stats and trading volume. What I mean by that is this bit right here. So we want the market cap, we want trading volume to see how big is this project. BNB coin has a $52 or $53 billion market cap, so that's obviously very large. It's one of the biggest platforms. Then you can see the 24-hour volume. Binance Exchange obviously trades the most BNB coin, 124 million. So it's obviously a very big coin with a lot of trading volume. If we go back to the main page, what we can see here is the 24-hour volume trading stats. Bitcoin trades $25 billion worth of volume, BNB coin around $1 billion. That's absolutely fine because the market cap is lower and it's just a smaller coin in general. But obviously as you come down towards the, kind of 100 or so, you can see the 24-hour trading volume is a lot less. Smaller coins are going to have less trading volume, but you want to see that there is some trading volume in this thing, because that really is the marker of a healthy market within the asset. Then we just want to look at the market sector that something is in. So for BNB coin, what we can then do is look at all the information just within this, actual specific page. You can see their socials, and you can look at some other information here. Go over to Twitter, go over to the main page of the project, because every project should have one. And then what you can do is just find out their links to actually learn more. So you can learn more on the actual page itself, and you can have an overview of, like, what does this chain actually do? As an example, BNB chain, we all know it's a smart contract platform, and you can get that information by reading all of the info that they put out on their page. So BNB is a smart contract platform, so having that in mind, what I can now do is go and compare it to other smart contract platforms. So we're looking at Ethereum, Cardano, Solana, Polkadot for the most part, and their ecosystem as well. So they're the competitors. So immediately I'm getting an analysis of, like, what sector is it in? And then very quickly, I want to look at dilution and the valuation of that thing. What I mean by this is, if we click on BNB, what you can see by the stats right here is circulating supply and total supply. It's really important for any currency or asset in investment is, how many shares does it have? You call them tokens in crypto, but the total market cap, the total valuation is 53 billion. How many tokens does it have? You can see BNB coin has around 163 something million. The total supply is in circulation though. That's really, really good, because that tells me that there's no new tokens that are going to be created that are going to dilute all of my holdings. It also tells me that it's a more mature coin, because mature coins have most of their inflation out already. That's a good sign, and it means it's probably a mature coin. Now, that also means that the growth may not be as fast as some smaller coins that are newer and potentially have more tokens to create. The reason why projects and coins create new tokens is essentially to incentivize new people to come in. They use them as incentives because it is an ownership of the network. And so they often just give away some of their equity to incentivize people to come in for many different reasons. But that's just like an overview of the market stats and the positioning of a coin. Now we're going to move specifically onto the economics of each token, and then you can compare them across different tokens, different coins, or different types of asset. So you can actually do this on CoinGecko as well. There are other platforms like Masari you can look up as well. I'll go through some of those later on in this video. We're going to look at the tokenomics. Now, if you don't know what tokenomics are, or if you need kind of a more basic guide, I have all of these videos on tokenomics in the crypto course. It's basically a step-by-step guide going through, everything important on how to analyze cryptocurrency. We have tokenomics. There's also a do your own research step-by-step guide in the crypto course as well. And there are also private Discord groups as well with, a few thousand members in there. I'm in there if you want to ask me a question about any of this stuff as well. I'll leave that linked in the description if you want to check that out. But what I want to do after I've done that initial analysis is to look specifically at the economics of each token. We're going to do CoinGecko for this, but what you can see is I now know what the allocation of all the tokens are within this, within this asset, within this investment. So I can see that 60% of Cardano ADA's coins went to the initial coin offering. So that was initial investors that funded the project. That's fair enough. Around 10% to the team. And then the rest is staking rewards. A really simple split of who gets what tokens and who owns what part of the asset itself, the whole ecosystem. Now, what you can see here is that there are some staking rewards and incentives that are paid to people that have come initially into the network, and they rise over time, but eventually it will stop at 45 billion coins, and that's it. There's no more tokens and there's no more inflation. So I can see that in Cardano's example, that it's a fairly fair distribution amongst early investors, people that stake, and some for the team. Now, you can compare that against something else. I've got ApeCoin here, and what we can see here is that, 15% went to those NFT holders, the initial NFT holders. We have Yuga Labs getting 15% and the founders getting 8%. That's almost, let's say 25% or something for the founders, which is quite a lot. And then the treasury or resources here, that's for future investments. And look at the inflation. There's quite a high inflation over time as well, which isn't great, which means you're going to have loads of new coins coming onto the market, unlocking, getting sold to pay for the investment of the ApeCoin games and ecosystem. So what you need to do now, looking at the type of token, is to kind of differentiate these, because different types of tokens now will have different types of supply and incentives. So what type of asset are you comparing here? It's actually difficult to compare ApeCoin, which is a token, versus Cardano, which is its own layer one ecosystem. But you can definitely compare and contrast these things. So what type of asset is it? Now, L1 tokens should really have a much more diversified supply. L2 tokens really, or kind of apps, right? You can call these dApps as well. These are going to have much more of the tokens in the team's hands, because this is a lot more like equity. And so you're basically just investing in that product rather than a network. So that's obviously different. Supply and incentives, do they pay out incentives for people to use the ecosystem? Cardano ADA, much like L1 chains, pays out staking rewards for people to stake. That is an incentive. ApeCoin also will pay many incentives through essentially staking rewards. They do some of that, and also just selling a lot of these tokens out to pay for their growth. So you have to understand, like, are there yield incentives? Is that going to dilute your holdings? Everything like that, and compare. Tokenomics is important. Like I said, was there a pre-mine, or was the ICO, like for Cardano, was that fair, or was it all to the team? Like I said, dApps will have way more to the team. L1s shouldn't really in an ideal scenario. And how many tokens are left to actually come out versus how many are already in existence? Like I said, more out in existence is better than fewer, because if there are fewer, it means dilution is going to play a part for a longer period of time, which isn't great. What type of asset is it? Is it an L1? Is it a dApp? Is it an L2? Like, is it a scaling? So like, what type of sector is it in? And then you can really segment the different types of token, and then compare and contrast in that way. What I'll do now is a competitive analysis of a specific project versus other projects. So when it comes to crypto, there are a few outliers that we need to take out of the situation. The first outlier is Bitcoin, which is completely different to everything else. And then you have stable coins, which are just currencies, like, US dollar currency or pound sterling currency or whatever. Most other things, it doesn't matter if you call them a layer 1 chain or an application or anything else. Essentially what they're doing is creating a platform for other human beings to create value, right? So the only way value is created is if there are users on this platform doing something and paying fees and creating value that way. So that can be an L1 chain like BNB or Cardano, which is a platform for applications, or it can be an application itself like Uniswap, which is an exchange where obviously you charge fees and then earn revenue that way. It doesn't really matter to me, to be honest. You can call them currencies, sovereign nations, sovereign blockchains. It doesn't matter. Humans create value. And so what I'm going to do is look at where the value is created and how the value can accrue to a token. There are many different ways that this can happen. On an L1 chain, where these act a little bit more like currencies, what you're looking for here is how much yield can you get out of owning that token in terms of staking rewards and people paying fees on that layer 1. Down for something like Uniswap, this is simply a crypto exchange, and so you're just looking for trading volume and how much fees people are paying. So what I'll do is a very simple business analysis. I know that Uniswap is a crypto exchange protocol, and that's it. It's not a layer 1 chain. It's not acting like money, like Bitcoin. So that's a sector. And it also plays in my mind, like, how big can this get? How big can an exchange get? Well, maybe as a protocol, people can use it for different things and actually, create other protocols on top. But essentially, what you're saying is how much value can accrue to this token. And the way that Uniswap accrues value is if people pay fees, and then some of those fees are siphoned off and put in a DAO, and so that DAO has value, and the token holders obviously can do whatever they want with the value in there through fees that are paid, whatever they want to do. No incentives are paid in Uniswap right now. In fact, Uniswap doesn't actually charge fees. Everything's free on the platform, and Uniswap holders eventually are buying Uniswap because they think over time Uniswap will charge fees, and so that's why it has value. Remember, the only way that anything has value is if investors think that there is a flow of cash in the future that can accrue to the token and then be paid back to them. That's really the only way value is accrued in anything, except, like I said, for Bitcoin, which is totally different, and it's a store of value. It's a reliable and boring business, which is actually quite good. Then we go to something like Steppen. Steppen is a game, right? And so you have to say, this is not a blockchain. This is not like an L1 blockchain that's charging fees. Steppen itself is a game. And how big can a game get? Can a game earn more money over time than the largest crypto exchange? Possibly or possibly not. That's up to you to obviously make that decision. What Steppen does as well, though, is pays incentives for users to come and play the game. When these incentives run out, what's going to happen to that token? And so Steppen might be a really good game, but is the token itself actually valuable if people stop playing the game? So you can look up the Steppen token. There's also something called GST or Green Satoshi tokens that actually are like an in-game currency. Is that something that's cool to own if you play the game? Maybe. Is it something that's going to accrue value through charging gamers fees and then giving those fees back to you? If it doesn't do that, then it might not have value long term. How does the token generate revenue and value over the long term? So this is just the questions that I'm asking. Then something like Polygon. This is a layer 1 scaling technology, and they charge fees for all of their technologies in Matic. So if people want to launch an application on Polygon and use their blockchain or use one of their other networks that they have that are being built on top of Ethereum, they'll have to pay fees in Matic. And so that obviously accrues value because they are charging fees for a service, which is their technologies. And that's a reliable and boring business. Eventually, after all of the hype is down, you have to say, is this business something that can stick around for like 10, 15 years, charge fees to users, and then pass those fees back to me? Most everything in crypto, you can use that analogy for, except for Bitcoin. Once I've done that business analysis, what I'll do is actually look at the fundamentals of every project and see like if people are actually using this thing. Like, are people using it, or at least are users growing and are fees being generated, or is the business actually growing over time? If it is, then that's obviously a good thing. Time to dig deep. So what you can do is actually go over to something like the project docs. I would not read the project docs until I've done all of that previous kind of research. If I'm more interested in a project, I'll go and look at the white paper and see, okay, what are you guys really doing right here? A big tip here is don't believe everything that you read in these things. These are marketing materials essentially. And so you have to look at all of this with a critical eye, and definitely take a step back and realize that essentially what everyone is doing is trying to make money off people. Now that's great. If they can make money off people and you can buy a portion of that as an investor, that's what you want to do. But you don't want to be the product. You don't want to be the one buying a token that's going to get left holding the bag. So firstly, I would read all of the project docs, take a step back and really analyze what they're saying. Like, how are they going to make money? How's that going to compete against all of the other apps doing the same thing? And how are they going to generate revenue for a token that you might buy? The second thing is to look on June Analytics. I've got a great video going over the top 10 platforms that I would use here. I'll leave that in the description. Really, really good. And it just goes through the top 10 platforms that you're going to get great information. June Analytics is like fundamental info on blockchain and app usage. So for a new network that's just come up, which is Optimism, which is a layer 2 for Ethereum, what I'm going to do here is look at all of the fundamental usage statistics of Optimism as a platform and as a network. What I can see is that the transactions are generally going up. That's a good thing. I can see the approximate on-chain value is also increasing. Now, this is great news because what is a network? Well, it's transactions, it's volume, users, the amount of value that it has on there. That's all good. And so I want that to be as large as possible, or at least moving upwards. I can also see on Optimism is a general purpose network with many apps built on top. So what I can see here is that Perpetual Protocol and Velodrome, these are both exchanges doing really good transactions and volume. That's good. It's also plugged into Uniswap, and that's doing good transaction volume as well. So everything looks pretty healthy for this network, and that's good news for me. And obviously what I want to see over time is that growing. I don't have to buy now, but if I see this continued growth, that's obviously something that would interest me over time. I'm going to look at other things as well, but after that, looking at the fundamentals, what you might want to do here before investing is to really get an idea of like, where are they in the roadmap of actually bringing through products and services that people use. Go onto the Twitter, follow the official account for sure. Also follow some other accounts that maybe post news and updates about new product launches or what they're doing or upgrades. So you can see all of that here. For something like Polygon, you're going to be looking at what applications are launching on the network. It's just basically a stream of all the applications that are launching. This is good. You need to be up to date with all of this stuff to know like what stage am I in, and is there going to be a lot launching over my investment time horizon that's going to add value for it. That would be something that I look at. Now what we want to do is like a competitive analysis of like, how much money is the project actually making, if any? So what I would do is go over to something like Token Terminal. Again, this is free, really good resource. And you can just see how much these applications or networks actually making right now. Ethereum over the last 180 days has made almost $2 billion. So great. That's fundamental value that can be passed back to token holders or coin holders, especially when it moves over to proof of stake. A lot of that value will be returned. But we can also look down here to see that Avalanche, PancakeSwap, Decentral Games, MakerDAO, they're all making decent money, right? And so if it's making money, at least it has a better chance to actually accrue value to tokens and to investors. You can also look down here at the price to sales ratio and price to earnings ratios. I won't go through those in this video. It gets a little bit complex when looking at layer 1 tokens, because layer 1 tokens like Ethereum, Cardano, Solana are expected to kind of have a money type of use case within its system. And so it's kind of difficult to look at a price to sales ratio. It doesn't really work because they're not really equity. What I would say to look at more is, can can sustainable yield be gained from an L1 token? I think L1 tokens as money in their system will be valued on how much yield that they give and potentially not the price to how many fees are being paid. It's kind of a difficult way to value them, but layer 1 tokens are very different to something like Aave, which is just a lending application that charges 10% of borrowing amount. That's very easy. That's a business, and you can very easily value a business based on its profits. L1 tokens act a little bit like money, a little bit more, and so are a little bit different to value. You can just see how much are these tokens actually earning. Total revenue, something that earns more money has a much better chance of returning that to me as an investor than something that makes no money at all. So come and compare and contrast them in terms of how much money they actually make. Some of the key things that I will always keep in mind then when analyzing a cryptocurrency is inflation versus deflation. Inflation is the creation of new coins or tokens as an incentive for you to enter into the ecosystem. This is good initially to incentivize people to get on board, but it's not good long term because it destroys value. You want deflation where a protocol or a smart contract chain or whatever earns money through charging fees for its block space or its product, and then passing those back to token holders through a buyback and a token burn or a dividend known as staking rewards, right? So it doesn't matter. It just needs to be profitable and economically sustainable in order to pay some sort of yield back to people that own it. That's the only thing that will drive value long term. It needs to return protocol profits to investors. That is what is fundamentally going to support the valuation long term. And there are some slight other valuations that can be put in here. For example, can it be used as money within its system? That might have a much larger valuation. It might be tied up to collateralize other assets. Gets a bit complex there, but for a very simple way of looking at it, you need an economically sustainable ecosystem. And the only way investors are going to keep buying the asset is if they expect a return from it, except for Bitcoin, which is a store of value, which very different. But what asset type and sector is it in? The layer 1 chains are a diversified bet on everything built on top. And then you get more specific when you look at exchanges like Uniswap or PancakeSwap. They may not be able to accrue as much value over the long term because they're in a more competitive landscape. There are many exchanges, but there are only a few L1 chains that have really, been able to grow large ecosystems. So you have to look at that. And then the business model and sustainability as a long-term investor is really the only thing you need to look at. It needs to make healthy profits and pass those back to investors. If it doesn't, then it's just going to spiral down eventually and become worthless. If you want a step-by-step guide on cryptocurrency, how to analyze, how to compare different ecosystems, if you want to see my portfolio and all of my trades and join a crypto community of thousands of people, check out the crypto course. I'll link it in the description. It gets updated for free for existing users over time with brand new videos and my analysis of what's going on. So check that out if you're interested. Everything else I discussed in this video down in the description as well. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.